Hey everyone, this is Michael Bengiat from Lifetime Investor, and this is the Stock Picks Weekend Review video for August 20th, 2022. Here's our disclaimer. You can pause the video and read this. So as usual, we're going to start just talking about the current market environment. We'll go through the stocks in our portfolio, and then we'll go through the stocks on our watch and ready list. So just in terms of the overall market, we're still in a market environment of yellow. I think we upgraded from red sometime during the week, and we've upped our exposure to 25%. But we're really just not getting a lot of traction. That's really, and this has been going on for a long, long time, it seems like. Many stocks have been going down. We've been in a bear market, and we've been trying to just find the best of the stocks that are not, and the ones that are making new highs or all-time highs, while the rest of the market is heading down. But it's been a struggle. I mean, right now we have a few positions, and they're really not going anywhere. We go up a couple percent and then down. I mean, we really haven't seen anything even go up 10%. It's been there have been some stocks. I track a lot of stocks, but the ones that have usually just broken out, and you can't even buy them, and then they crash. Sometimes we had one of those during the week. I didn't even have time to put it on because it was within 2 minutes, it was already up 13%. And then the next day, I took half the profits on it. And then the next day it crashed like 22%. So this is what we're seeing. There's just, ultimately what's happening is there's no institutional support for stocks. Normally when a stock breaks out, and institutions are there to keep buying, because they don't just buy in one sitting. They might have to buy 500,000 shares, and they can't do that in a lot of stocks in sitting in one at one time. So they build into their positions over weeks and sometimes months. And so, they don't want to push it up too far, so they're buying, and the stock, of course, is going higher. So they back off. It comes back down, and they work it. And it comes down to the 21 day. They might buy some there. It might come down to the 50 day, and they buy some there. And that's where you're supposed to be getting support, and we're just not even getting anything. When these things are breaking out, most of them, it's just retail, which is not a lot of power behind it, and then they end up just selling off. So we're just seeing that over and over, and that's been the theme of 2022. And the only way to deal with that is you have to take profits quickly, but we're trying to always keep, if we're having a stops at 4%, around there, which is our kind of our average. We don't want to be taking profits at 4% because in the end, the math makes no sense. If you're taking profits at 4, but you're getting stopped out at 4, you don't make any money. So we're always trying to do a multiple of that. So at this point, if we can get to 8 to 10%, we'll usually take off something. But we're just not getting that because there's just not a lot of stocks are doing it, or they're gapping up, or they're doing big V-shaped rallies, which are really not, we don't buy those because they're really prone to fail. And or they're running. Other things we've seen is they're running up into earnings in a V shape, and then earnings either goes higher or it sells off. We've seen a lot of that. So that's the market right now. So it's been a little frustrating and it's been tricky, but we just continue on keeping a low exposure, and that's how we survive these periods until we finally will have what is an easy money period, and then we can get aggressive and go full blast. And that's when they start racking up profits quickly. But at this point, we can't do that. We've had too many losers. If you look at our history, there've been a lot of stocks that have been stopped out, and that's why we're trading half positions and even quarter positions. So that's how we're doing it. That's the way to keep yourself on the right side. When you're trading well, you have more positions, and when you're not trading well and you're not making any money, you're backing off, and eventually you back off to nothing. And that's usually when the market is poor, and then turns even worse in a bear market. And so we've been mostly out when those periods are going on. What's also tricky about this period too is that there's just enough stocks that are acting well to get us interested, but not enough really and they're not acting all that well once you do buy them. So yes, it's a difficult period, but we will continue on. So let's go ahead and look at, start off with our positions. So the first one is Vertex. And this is very highly rated, great earnings, great sales, great margins. And you can see we bought it coming up on this kind of an unorthodox buy. And right now it's acting really pretty well. I mean, it came up, it just pulled back. You can see it pulled back on lower volume. And this is what you want to see. You can see like even here, we had a long kind of grind lower. And look over the course of, well, this is actually a month, almost 6 weeks. And then just in 3 days, we made it all back up. That's what you want to see. You want to see, you usually don't like to sit through this long of a decline. And in some cases, you'd be stopped out if you had bought up here. But you want to see this kind of action where just, in a few days, it makes up for any kind of decline. So here we rallied up, made a new high. Just a couple days, came down. And then one day, new high. And we came down 3 days, and then we started another rally off of a 21 day. That's the green line here, and that's where institutions should step up and support the stock. So we're in here now. Probably once you start getting a couple the breakout, and you have a couple pullbacks, and if it starts getting extended, like it just starts going here, that's probably where we will start selling into it. All depends on what's going on. If the overall market's still poor, then you go with the flow. But if we were in a strong market, we would probably start seeing this really getting extended, and we would sell into it. So that's our plan for Vertex. It's doing absolutely nothing wrong here. Obviously, it breaks down below this now 21 day, be a little erratic and not normal, and we may come down and test the low where our stop is. But for right now, it's looking pretty good. So we're sitting with that. Let's look at Royalty Pharma. Ticker is RPRX. Now this one, we bought it. We're just up 0.25%. So you can see we bought it coming out, and it's just kind of just wedging up here. Now the good thing though, you can see whenever it's gotten up around the 44.75 here, 44.47, so around 44.50, let's call it. Sellers have just pushed it back down. So now we're actually coming up here, but look at the selling is very muted, and we have very low volume. So this is what we're always looking for, and then ideally we'll finally get a breakout from this level. So we want to see it. If you can get tighter and tighter sitting over here, right close to the area where the sellers were, it means eventually the sellers are gone, and the stock is kind of the path of least resistance is up. So that's what we're looking for. If depending how it works out, we may even try to add to our position a little bit, but we'll see. That generally in this market, adding positions really hasn't worked all that well, because you don't get the kind of big moves that you would get in a better kind of a market. Okay, so let's look at Merck as the next one. Ticker's MRK. This one we bought coming out of, we bought it in the right side here. There was a little consolidation here right at the 50-day. We bought it coming out of that. And it's acting pretty good. I mean, low volume so far, but it's still building the base, so we don't expect huge volume as we'd like to see, like when it's breaking out. But you can see it's been a volatile trader. Here, the same thing we've seen before. We had a V-shaped just run up for whatever reason, and then it pulled back, tried to come up, then it really pulled back. This is why we don't buy those V-shaped things. In fact, some of our sell signals, we actually have a brand new sell signal mastery, selling stocks mastery, sorry, wrong name, course, a video course that goes into all the sell signals, and this is one of them. A quick rundown, usually in the weekly chart. Let's look at the weekly. Yeah, you have just a few weeks down, and then you have a jam back up to new highs. That's actually a sell signal. And you'll find it on the site. You have a real good deal on that, a little pitch for our new course I've put together. So this is looking pretty good too. So it's just probably going to, ideally it would come and float up back to the old highs, consolidate, form a handle, because it looks like we're getting a little bit of a cup with handle, even though this is saying a flat base. And then we would take off from there. So we'll see on that one. In our long-term outperformer portfolio, we have Humana. Its ticker is HUM. This one we've had for a while, and it just really hasn't gone anywhere. We're up about 4.25%, and it finally started to break out here. And so it did break out, and then it just formed a little tight consolidation, and then made a new high on Friday. So it could be that this whole period here, it just had to consolidate, and ideally we'll be heading higher. Just a few things about this. It's overall rating in 95 out of 99. You can see just annual earnings are really just starting to ramp up. Next year is $27.78. for annual earnings. That's pretty good. It's a big cap. We're at $63 billion company, but it's looking pretty good. It's taken a while. You can see it's just been in this blue buy zone. It came in and it got pushed back, came in, pushed down, came straight back up, out again. This is what we've seen a lot of this kind of action in stocks. Just not a lot of progress, so which is what keeping our exposure light. So let's take a look at a couple stocks now on our ready list. And the first one is T-Mobile. Ticker is TMUS. This one, we have an RS rating of 91. We haven't talked about that yet. Now this one too, it had a little base on base here. You can see this giant cup here, and then it kind of broke out, but just formed another base. And nothing wrong with that. And then it finally broke out on earnings, which made it difficult to buy there. We bought it over here, and it's just kind of grinding up here, which is not ideal. They call this sometimes wedging. And sometimes when they wedge, you'll get a sharp shakeout. But we are in the buy range. We're in actually over here. So it's not the greatest setup, but that's what it is. We don't sometimes get the best setups. So we're always trying to find the best, and sometimes we give you the best of the worst. Earnings, for whatever reason, really are dropping this year, and then they really ramp up next year. So not quite sure what that's all about. But all in all, good ratings. Earnings have dropped. The sales have dropped this last quarter. A little bit of a warning there, but it is viable at this point. The next one is Amdocs. This one I actually really like, and we didn't buy it for the portfolio just because we already had a few other stocks and we didn't want to up our exposure. But this is acting pretty well. It's finally starting to break out. Let's take a look at the weekly. I think we're at all-time highs. Yes, we are. So it's always a good sign when stocks are breaking to all-time highs because there are no losers. Everybody's a winner as of Friday. So of course people start taking profits, but that's a good sign. Our buy range goes from we're at the very top of the buy range. So this one probably, if you haven't bought it, you just sort of wait. Ideally, we'll get like the other ones. We'll get a little pullback. We can buy it on the pullback coming back up, and we'll see. So let's go to our watch list. We actually have quite a few stocks here. I'll have to kind of go a little quicker, or this video is going to be an hour long. First one's Amylyx Pharmaceuticals. This one was actually looking really good, and then earnings kind of gave it a lot of volatility. We don't like these little spikes, but we're watching this. Our buy zone is right coming out of here. So we're just kind of watching. It will be running into the resistance if you buy it of these two spikes where obviously sellers came in. But that's on our watch list. It's got a great RS rating of 99, as high as it gets. So we like that. Next one is Lantheus. This is one of my favorite companies. Number one, the fantastic triple-digit sales and earnings going on. This interesting, really tight trading here on low volume. That's a really good sign. In other words, the stock has broken out to new highs. There was some volatility here. Again, we've seen that. And then it just came ripping straight back up. But we passed earnings, and it's just trading really tight. And generally, you'll start seeing that it comes out the top. So we're watching it to break above this. And this is one we'd like to own. It's really acting like a leader in the market going forward. The next one is CRDO, which is Credo Tech. This one didn't have a good close on Friday. And it's a recent IPO. It's still working on its base. Excuse me. Tried to break out here and just got pushed back down. So we'll see. It might have to just build out a little longer, but it's on our watch list. It's one of the few, kind of tech stocks that's actually not, it's near new highs and not new lows. The next one is Dollar Tree, and we also have Dollar General. Both kind of looked similar. Volatile action. You can see there was, I'm not even quite sure. I think some other retailer announced some poor earnings. Might have been Walmart that day. This plunged and just came straight back up. Tried to break out. It's been volatile. So we like the fact that it's tightening up here. and we'll try to see if we can get in breaking out of there. I'll go to Dollar General next. Oops, and that's DG. A little bit better chart because it's this tight area is forming up near the top, but it's been a little volatile too. So we're watching that, and of course both this Dollar General and Dollar Tree earnings are in 5 days. So I think that's either going to be Tuesday or Wednesday. So we might just have to watch those too soon in front of earnings. Acadia Healthcare. This one is also a nice. It looks like a leader. It's got pretty good earnings and sales, increasing margins, which is good. It's just forming a sort of it broke out and just forming. It's kind of almost like a little cap. It's like it might even end up forming a base on a base. So, but we like this action here. It's not being too volatile. We've passed earnings, which is good because earnings is always kind of a tricky period. So that's on our watch. And we have the last one is AZN, AstraZeneca. It's starting to act a little better. It's starting to tighten up. You can see it tried to break out, then it got volatile. And you see it's just getting tighter and tighter. This is really good on low volume. In other words, we're getting right back to this area where sellers have been lurking and maybe they're not lurking there anymore. So we're trying to see if they can break out again. And we have our buy right at the top of this area here, right there. Okay, we just have a couple more. And our long-term outperformer, we have Cadence Design. This is a great company along with Synopsys. They provide a lot of design automation software. Some of the few tech stocks that have really done well. Now this one took a dive in the bear market, but came right back and is back in the buy zone of this giant cup with handle. It's been a very great performer. That's why it's on our long-term outperformer. You can just see this is just look at the RS line, just cruising up. So this is one we'd like to own. It just kind of it broke out, then failed, and then just took off quickly. We didn't want to add more exposure, but we're watching this. We might try to add it depending what happens. But it looks like tech stocks are actually pulling back again after their big run. So we're watching it. But the buy range it's just right above the top of the bottom of the buy range. So we'll be watching this. We may try to add it. That's it. That's the stocks on our list. So we'll be back next week. And we'll see if if the market improves or we get some better action, we'll be adding more exposure. But a few of the ones that we like the most, this one, Lantheus, and what was the other one? Amdocs, which is almost out of the buy range, so we might have to just wait on that. But Lantheus we're watching. So that's it. Okay, I'll talk next Saturday.